Well, good evening everybody. This is 3rd May 2015 where we're going to speak about a topic which is known as overbought and oversold signal or trailing stop loss. Now in this we are going to cover what's happening in the foreign exchange market. Example, I am going to speak about overbought and oversold signal from the perspective of foreign exchange. From this side, I am Rahul Magan. I am working as a treasurer and I am also running my foreign exchange academies titled Foreign Exchange Every Thinkers on YouTube. It is also available on LinkedIn, and you can also welcome to join my WhatsApp. I am running 3 group which is Every Thinkers. You're welcome to give me a call at 9899242978, which is an Indian number, and you're welcome to write to me at rahulmagan8@gmail.com. Well, I'm again reiterating the fact that today we're going to speak about a topic which is known as overbought and oversold signal and the trailing stop losses. Now, what do you mean by overbought and oversold signal? An overbought is a signal when the market is moving at a very fast pace. Take a very simple example. Today, Euro is trading at 1.1250, and there is news which is coming in the market that there is not going to be an exit of Greece, Portugal, Italy, Ireland, and Spain, which is known as PIGS. They are not going to basically leave the euro, and the same euro would touch 1.13. 1.1350, it would touch 1.14 and probably 1.15 as well. So this is basically euro is going to start touching. And well, one thing which we very well able to understand and which we should know very carefully is that overbought and oversold signal are 99% rely upon emotionality than the fundamental fact. So they are not going to rely on fundamental, they are going to rely on emotionality. Now take a very simple example. Now euro here go to 1.15. This is where the traders will feel that they should sell because this is overbought. So traders will make a sense. Traders refers to prop traders. Prop traders will make a sense that from this level they do not think that the market will take euro to a higher levels. Example 1.16, 1.17 or probably 1.18. They think that the market would get down. So here the traders will sell because it is overbought here. Or take it other way. Euro is trading by 1.1250 and we are making a sense that Greece and the 3 other nations in Eurozone would like to exit, and Euro will go to 1.11, it will go to 1.1050, it will go to 1.10 and maybe probably 1.08. Now here market will make a sense that at this level a central bank of the country would intervene, which is European Central Bank, and they would like to buy. So this is the level of buy. So overbought means when it is excessively bought due to some fundamental or due to some emotional factors. Here you should sell. Oversold means that due to some factors, fundamental could be emotional, the market is falling down and you should buy. Now please be note that overbought and oversold, these both are the signals which you cannot predict. Example, here in this example we are assuming that euro will stick to 1.15 and here we are assuming euro will go to 1.08. One thing which all the traders would clearly have to understand, which is known as trailing stop loss. Now trailing stop loss means, now what do you mean by trailing stop loss? If euro would go to 1.10, then here you would sell. Now you sold at 1.15, this is 1 euro is $1.15, and euro will go to 1.14, then it will touch 1.13, then 1.12. Generally what traders would do, traders would sell at that levels and book profits, but they should not do that. They should follow a policy of a trailing stop loss. In trailing stop loss, trader once reached to 1.14 would make the target 1.13. Once they reach to 1.13, they would make a target of 1.12. Once they reach 1.12, and then so on and so forth. This is selling trailing stop loss. In buying trailing stop loss, you are at 1.08, market will go to 1.09, you will make this as a stop loss, then you will go to 1.10, then you go 1.11 and so on and so forth. So overbought and oversold signal are not very successive in the market until and unless you know the factor. Now the factor could be fundamental in nature, the factor could be emotional in nature, the factor could be anything. The only thing which you need to understand that if you are playing with an emotional factor, then you have to be very alert because emotionality can swing anywhere. But if you are playing with the fundamental factor, then you should know each and every fact of the fundamental. And once you are dealing with either overbought or the overbought signal, then you have to be very much careful about the trailing stop loss. You should not keep the stop loss. You should keep the trailing stop loss, because trailing stop loss can make you very happy. If you make a stop loss, you will book a little amount of profit and the market would go other way, and then you would think that you would have won a lot if you had not booked profit at that moment of time. The biggest difference is the trailing stop loss in that. So as a treasurer, today the purpose is to let you know what do you mean by trailing stop loss, what do you mean by overbought signal, and what do you mean by oversold signal. Well, I'm going to again reiterate the fact that you should be very well aware about overbought and oversold signal, whether this is a fundamental in nature or this is emotional in nature. You're most welcome to contact me at 919899242978. Well, this is my number. Again, restress, you're welcome to contact me at 91, which is an Indian code, 9899242978, and I'll surely happy to assist you. Thank you for that.